Bloomberg Audio Studios. Podcasts, radio, news.
Now to some breaking earnings. We have had Lloyd's of London reporting underwriting profit of £5.9 billion in what it calls an outstanding performance for 2023. By comparison, the full year for 2022 was £2.6 billion. And the insurance and reinsurance marketplace appears to have benefited from lower costs from large risk and natural catastrophe claims. Well, we can dig into those earnings now with the Lloyd's of London CEO, John Neal, who's with us in the studio. John, lovely to have you with us.
Great to be here.
This appears to be a strong performance, helped by investment returns, an 11.6% increase in written premiums with a 7% price increase. Talk us through it, please.
It's great, isn't it? I mean, to be reporting growth and B, to be reporting strong revenue earnings is just good news. I think it's good news for UK PLC as well. 80% of our flow comes from outside the UK. So I just hope it reinforces the credentials of the UK as a financial services market. So good all round, and dare I say it, good for customers too, because you want a profitable insurance industry to think about the different products and services that they need, particularly in a riskier world.
John, when we met a couple of months ago, you were very positive. You were looking to the United States for growth, and you've delivered in these results. But how unusual is it? How fragile is this performance in your view?
I don't think it's fragile. I mean, I think you know the story from when we spoke last time. We've been working for 5 years consistently to improve performance, reduce costs, show leadership where we think we can show leadership. So, as was said in the introduction, yes, for us, we had a lower frequency and severity cost of natural catastrophes and large complex risk losses, but we assume that will happen, and we don't take it for granted when it doesn't happen. So, yes, profits have been enhanced a little bit by a lower frequency of natural catastrophes, but I'm sure we're going to end up talking a little bit about the Baltimore loss, and there you have a very substantial risk loss, which we would expect in the normal course of events.
Well, indeed, let's compare that to previous marine losses. How does it compare?
Joe, the good news is when I sit sometimes and talk to you about natural catastrophes, what upsets me is how many people are not insured. The good news with this loss is the vessel's insured, the bridge is insured, the port authority is insured. So this is an insured loss. So from a financial perspective, yes, the debates will rage as to whose fault it was and who should pay what, but it is insured. So the financial power is behind the loss. But honestly, when you look at it from a marine point of view, this could be one of the largest marine losses in history.
Well, indeed, Janet Yellen, the US Treasury Secretary, says that she expects insurers to help cover the cost of rebuilding the bridge. You've got analysts at Barclays saying that smaller Lloyd's firms may be the most exposed to the claims. Have you estimated the potential claims exposure? So
two answers to that, really. So one, the way in which marine insurance happens in the world, you have these protection and indemnity clubs. There are 12 of them that pull together to provide insurance. 90% of the world's shipping is with those 12 clubs. They pool together to meet their resources, and then they buy insurance, and we're involved where they buy insurance. So Lloyd's has an involvement, but it is not the main involvement. There are many, many different insurers involved throughout. But I think yes, Yellen's right. This is an insured loss, so that there is the financial muscle to deal with the issues that we're talking about. And we visibly see the obvious damage, but it is the complexity you were talking about earlier on. It's the supply chain issues that really get quite complicated with these types of loss.
No, we understand that the marine insurers, of course, will cover a portion of the losses. But how material do you think it's going to be to Lloyd's of London as the kind of backstop after that? And just in terms of length of time, I think our audience would be very interested to understand how long something like this is going to take to unravel in terms of insurance.
So I think from our point of view, honestly, we would assume that these types of losses will occur every year. So in that respect, every loss is individual, but in the aggregate, yes, we assume these types of losses to occur. So we model for them, we scenario build against them. So this is within the levels of expectations that we would think could happen for this type of loss. Inevitably, and you said it in your bulletin earlier on, these things do take longer than people think. Constructing a bridge is a 4 or 5 year program. So I think the supply chain issues will reconcile quite quickly, and we're seeing that happen as quickly as we can. But some of the rebuild issues just take a little bit of time. So it's not the financial preparedness to pay for the loss. Clearly, as money is needed, then money will be available. But it just does take a little bit of time to repair and reinstate. Just
staying on shipping, we've also had the attacks on shippers in the Red Sea for 3 months now. How do you see that playing out? How do you think about the shipping risks and the insurance costs?
So from our point of view, as you know, it's the Red Sea is not uninsurable. number one. It's not uninsurable. And you've seen us also deal with the Black Sea corridor, with the transportation of grain and fertiliser. So for us, it's more about the politics and the government requirements as to what you can and what you can't do. So provided the agreements are in place at a government-based level, then insurers can step in and provide cover.
But actually, you differentiate between the Black Sea and the risks in different places. So you've pulled back from insurance around Taiwan. You've been supportive of providing insurance to Ukraine, both for shipping grain and other produce out of the Black Sea. Why those differences?
I think it's just trying to understand whether there is the appropriate intervention to give protection around the passage and transportation of people or goods. You just need the certainty that there is security in place and that transportation can be undertaken sensibly and safely. I mean, that's the one issue that we're looking for.
Okay, let's talk a bit about climate change. Swiss Re Sigma reporting this week that for 2023 insured catastrophe losses, they'll be again above $100 billion for the year. And that's the fourth year in a row. That's a huge sum. I mean, I know that Lloyd's has managed to avoid actually this year some of the major climate risks, but you can't really avoid the climate change impact.
No, so you know, the good news for us is you won't get an insurer will ever sit in front of you and deny climate change. You know, we've been looking at the data for 30 years, and a normal year costs about 125 billion for natural catastrophes. That is almost twice what it was a decade ago. So we know those numbers will grow and grow, and they'll get nearer to 200 billion or more as we recognise and realise the impacts of climate change. Do we feel comfortable providing insurance and protection? The answer is yes. Yes, we do. I think what we've got to do sometimes is just do a better job of trying to explain to the end customer why insurance is valuable and it can genuinely help when these difficult situations present, particularly the weather-related or climate-related loss.
Look, I thought one of the things from that Swiss Re report that sort of stood out is that there needs to be sustainable and affordable property insurance, that there needs to be a concerted effort by private industry, the public sector and broader society to try to mitigate these sorts of risks. Is there any country in the world that's doing that?
So I think there's lots of countries that have got problems. The US is difficult, Australia is difficult, particularly when you look at places like Queensland. But I think what Swiss Re is saying is right. It does need all info. It needs the banks, it needs the insurers, it needs the regulators, and it needs the government to sit in the same room and say, how do we reconcile and resolve the problem? Between us, I actually think we can. It's not a lack of capacity or capital. We can solve these problems.
While we're in the world of ESG, Lloyd's is expected to issue a report next month on the historic involvement in transatlantic slavery of Lloyd's of London. Have you ruled out compensation?
We have in terms of compensation. I think we've been without hesitation in terms of apologising for our past association with the Atlantic
Of course, some people will want money rather than words.
So what we've done is we've turned around, we've formed a coalition of the willing around something we've called Inclusive Futures, which basically is designed to take colleagues from black or ethnically diverse backgrounds from the classroom to the boardroom. And we've got a plan there to say, look, we want to take hundreds, if not thousands of people on that journey. So what can we do today and what can we do tomorrow to represent those people?
How's the C-suite diversity now?
It's not too bad. So at a C-suite diversity, from a gender perspective, 50-50. You might recall that for the market, we set a target for women in leadership of 35%. We've met that this year. And we've said from colleagues from black and ethnically diverse backgrounds, we want our hiring to be at 1 in 3. It's currently at 1 in 5, which is a 4% improvement on last year. So it's progress. Don't get me wrong, progress is not enough, but it is progress.
Okay, final thought on net zero. You've begun a consultation to create a roadmap to ensure the net zero transition. Lloyd's of London frequently a target of campaigners who want, because you're insuring still carbon emitting industries. How committed is Lloyd's and its members actually to promoting the transition to net zero, getting rid of coal, for example, insurance?
So one, I'd encourage the NGOs. I think they've got a great voice and their voice deserves to be heard. And I'm absolutely fine with the protest and with the voice that they've got. I think our responsibility is not to set policy. That sits with government. So what we need to evidence is that there is a pathway to net zero. And our view is we should ensure that pathway, because we all need the harder to abate industries to actually go on that journey. And we sometimes get wedded on some of what we think the difficult industries are. You know, we all talk about aviation, but the reality is around steel and cement and those bigger issues. So how do we lean in to support those companies as they look to make the right right investment to affect transition. So that's what we're trying to do. We're trying to bridge the gap from where we are to net zero.
John Neal, thank you so much for your time. Join us here on Bloomberg Radio. The Lloyds of London CEO. Really appreciate you coming in to see us.